Hey, you guys, it's Wendy Robbins. I produce The Marijuana Show with Karen Paul, seen on Amazon Prime, seen by like over 7 million people. It's like Shark Tank for the cannabis industry, and we decided to start budcamp. What's budcamp? Well, basically, it's like mentor box for the cannabis industry. We talk about investments, we talk about being an entrepreneur, and we talk about health. And today, I am very, very fortunate to have Alanbrochstein, my new bestie, who is really an expert in stocks, cannabis, and otherwise. Hi, Alan. I was like, I got into slow motion there for a second.
It's still early in New Mexico.
Yes, it is. It is. And I haven't had my chili coffee. So, you know, life is tough. So we have a whole bunch of questions for you. I'm gonna just ask them rapid fire. The first question is, what are your favorite stocks right now and why?
Yeah, I know that's not the question, is it?
Yeah, I swear to God.
All right. So for all your listeners, you have to pay to get that kind of information. But kidding aside, if I say that now, it could change tomorrow. But so some of the themes, I think we'll talk about this more later, but you know, it can divide the market into really right now into two broad categories, Canadian and US. And there's been a lot of value created in the stocks in Canada. They've gone up a lot. And we're talking about mainly the licensed producers. And so there's 40 of those that trade publicly now. There's also a few other Canadian companies that are operating in the United States. So I consider those American companies. And so in the United States, you have all the rest of the companies, and some of them have done well and some of them have struggled. And we can talk more about kind of what makes them struggle later. But, you know, I have a model portfolio. There's, I don't know, 15, 14 names that I like. They could change. I'm not going to say what they are right now. But in general, the one thing I would say is I think the U.S. stocks look a lot more attractive at the margin than the Canadian stocks.
Really? Why?
Well, so it's interesting. If you look at what's happened over the last few years, there's been a lot of interest created in Canada because of legalization. And this has taken literally 3 years to play out since Justin Trudeau was elected. And so what you've seen happen is the emergence of these 40 publicly traded companies. There's 14 licenses held now. Some of these 40 companies hold multiple licenses, maybe as many as 10 for like Canopy Growth. And these companies have done exceptionally well in terms of raising capital. It's been phenomenal. Just the other day, Canopy Growth announced a $600 million convertible note deal. Another large player, Afria, did a $3 million equity raise. And these are the largest deals we've seen, but there's been lots of $100 million deals and even the smaller companies. So these companies have built themselves a big runway because now they have all this money. And they've done well because they've been taking market share in Canada from the black market a little bit, and hopefully a lot more in the future with their medical program now going to fully legal. And they have also they have these global opportunities. So it's very exciting, and consequently, you've seen investment bankers get involved, research analysts. There's a big infrastructure there, and it's created these valuations. I'm not going to say they're too high. Some would say that, and you know, I might understand their arguments, but who knows? I never liked Amazon, and it just kept going up. So, so with that said, though, if you look at the United States companies and you compare them to the Canadian ones, apples for apples, which there's no such thing, by the way. There are differences, which I'll cite in just a moment. But if you look at them on the financial metrics, you know, for a given amount of revenue and or loss, because these companies still run losses, the U.S. companies have a much lower valuations. They should, but I think it's way too much lower. And the reasons they should have a lower one are, number one, it's federally illegal still in the United States. There's always a risk that we could go back the other way. That seems to be moving in a better direction now compared to even earlier this year when Jeff Sessions ripped up the Cole memo, and you know, a year ago, a little bit more year ago when he was appointed Attorney General. But so that's obviously one big issue. And the second part, and it's related to that, is the inability of U.S. companies historically to raise capital. But this is changing rapidly, and I can talk more about that. And then the third one, and some in your audience may not be aware of this, but U.S. cannabis companies, the ones that directly operate in the industry, have to pay something called 280E. And this goes back to the 80s. It was intended to hurt the cocaine traffickers, but they've been applying it to the cannabis industry. And it basically says if you make your money off of an illegal drug like cannabis, you have to pay, you can't deduct normal business expenses. So because of that, sometimes, I mean, the companies have gotten creative about it, but you can pay sometimes more than 100% tax. I've seen examples of that before, where just if you're not very cost efficient, you don't know how to shift things into cost of goods out of operating expenses, then these taxes can just totally eat your profits and even your revenue. So anyway, so because you can have a cheap market like the United States, but if there's no catalyst, it doesn't really matter. And so I was pointing out for quite some time this disparity where, you could compare one of the large Canadian companies or even one of the small ones to somebody generating similar revenue in the United States. And it was just unbelievable, but it wasn't ever going to change unless something changed. And what changed, I think, was this Cory Gardner-Donald Trump agreement. And, God only knows if it's going to play out very well. We'll see. But I can tell you from my vantage point, we've seen just a total 180 within the industry, within check writers. And we're seeing big deals get done now with private and public companies. Emergence of investment funds now. So I've been covering the space for 5.5 years, almost 5.5 years. And things are changing very rapidly and favorably. So I think, I'm not telling people to sell their Canadian companies necessarily. That's not really the thesis. The thesis is it's now a better time to be looking at US companies. And I'm seeing these big deals get announced every day now. It's unbelievable. Just today, a $57 million deal was announced. And if you take the time to do a read through, you'll find out the Schottenstein family has some connections to it. These are the people behind American Eagle and DSW in Columbus, Ohio. They've already had some interest in the industry to date, but this is a massive play in Nevada. They're paying $57 million. And it's a pretty complex deal.
Wow. Yeah. Well, that's can you talk about hemp? Because, that's something that interests us because as we're seeing, it's becoming legal. So,
yep.
What do you think about investing in hemp?
So that's a good question, and hemp is interesting for a lot of reasons. Unfortunately, I kind of narrowed down to just one use of hemp. There's a lot of uses. Mm-hmm. The only one that's really of interest to me, at least in my focus, is the extraction of CBD. But that's not to say there aren't other ones. That's a very high value one, and it drives a lot of the investment in the industry right now. And it's very exciting what's going on in the federal front there. It looks like we'll see if it happens, but the Farming Act has some language in it that would basically legalize hemp for CBD, and it's phenomenal. And it's just one by one, exactly one by one. Everything's lining up, and this whole path to legalization is never going to be a straight path. It's always 2 steps forward, or actually it's like 20 steps forward, 19 back, it feels like. And this is a big step forward if this happens. And just recently, and this isn't derived from hemp, but it's CBD derived from cannabis plants. GW Pharma had its Epidiolex approved by the FDA, and it'll be scheduled in about within about 75 days by the DEA. And they're going to have to, the DEA is going to make it Schedule 3 at the worst, but probably more like Schedule 4, Schedule 5, meaning that all of a sudden what the government says about cannabis is wrong. The government says cannabis has no health benefits and that cannabis is harmful. But yet the FDA has approved a derivative of cannabis. And yes, I understand it's only CBD, but how can the whole cannabis plant be as evil as they say if this is true? And it is true. So I think that those two things, the GW Pharma's approval for Epidiolex by the FDA, along with this potential legalization of industrial hemp in general, but also for CBD extraction, is really going to pave the way for full legalization down the road, or at least I don't like to say full legalization. What I like to say is that basically it'll be legal. I don't know that the federal government will ever say it's legal, go for it. I assume it'll be regulated by all the states, and it'll be different in each state.
Yeah, and of course the United States government has a patent, but don't get me started on that. So, if I'm new to it, here's another question that just popped up. If I'm new to investing in stocks, what are the rules I need to follow to minimize my risk?
Yeah, so that's what I spend a lot of time talking about, the risks. Everybody likes to focus on the opportunity, and there's a lot of people out there that are paid to write about the opportunities, and they promote, you got to get in now. This is the chance of a lifetime, blah, 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 blah. I take a totally different approach because, like I said, I've been watching this for over 5 years, and there's a lot of snake oil salesmen. Most of the U.S. cannabis stocks are traded on what's called the OTC, which stands for over the counter. A lot of them don't even file with the SEC. Most of the companies that I follow or follow marginally are, in my opinion, I always put them into two buckets: outright scams or just never going to amount to anything. Most. Some are really good companies. There's a handful, maybe two handfuls now, and it's been increasing. And so I think people need to understand, first of all, that there's a lot of bad actors out there, and that these penny stocks are not unlike other penny stocks. It's the exact same thing. Penny stocks are dangerous. And that doesn't mean that you can't make a lot of money, and it doesn't mean that there can't be a good company, because there are some good companies, in my opinion, that are on the OTC, because they don't really have an option. If you want to be public, you're going to basically be on the OTC. There's only a few companies that are on higher exchanges. So that's my first thing that I tell people, just to be careful, because it's a snake pit. It really is. I think it's also important to understand that this is a startup industry. I know cannabis has been around for a long time, and there's companies that have been out there for a long time making money off of it. But for the most part, any company you're looking at nowadays in the legal market is going to be a startup, essentially. And it could be a 3-year-old startup. Canopy Growth, I think they launched in 2013. They're in Canada. They're the largest in the world in terms of companies. I would call them still a startup, and they have a market cap of about 8 billion Canadian or something like that, 8.5 billion. But it's a startup, and they're losing money. So it's really hard to find companies that are out there that are not characterized as startups. And so investors need to understand that as a consequence of that, your confidence has to be lower. You can't have as much confidence in a startup as you might in an established company like Exxon or Google, or a company that's been around for a while, generating cash flow, long operating history, recurring revenue models, maybe things like that. So I think that's an important thing for investors to understand as well. I could probably go on, but let's do another question.
Okay. So when do you cut your losses?
Yeah, I don't have a strict rule for that. At 420 Investor, I do have some model portfolios. One of them is more short-term focused, and I do try to provide in advance an intended stop loss, but I never lock myself in on my targets or my intended stop losses. For my other model portfolios, they're measured against an index, and I don't have a rule. I mean, look, if a stock drops 50%, you should sell it if it's going to keep going down, right?
Yeah.
But how do you know if it's going to keep going down? I don't know for sure. So I think any investor needs to always be in a position to understand why a stock is falling. And conversely, I don't hold on to things just because they're going up, because sometimes the stock goes up and the next thing you know, it's down. So I don't have a firm rule for how to operate. And I think the way I approach things is I watch the whole sector, and whether it's Canada versus the United States, the plant versus ancillary. There's a lot of different ways. And then you can look at the sub-segments, and if there's 5 companies that are very similar and one's going down and the others are going up, maybe the one going down is an opportunity, or maybe there's a signal that there's a problem, so you have to research it. So yeah, I know people want a really easy formulaic answer, like you sell your stock when this happens. I don't think it exists.
Yeah. Well, what are some other indicators, like I recently just got into the stock market. So I'm like really looking at my E-Trade account with the information that they're giving me and trying to suss out what makes sense and what doesn't. So are there indicators? Like, do you look at a full year? Do you look at 5 years? Do you look at 3 months, 3 days? Do you look at the little red and green thing on the bottom?
Yeah. So it sounds like you're talking about technicals, and I think that there's a lot of different ways, and there's no right way. I always tell my subscribers, I don't have a monopoly on the way to do things properly. But I think, you get there's a big argument out there that's existed for a very long time, and that is like, do you really need to research companies, or can you look at charts? Or do you really need to look at charts? Can't you just research the company? And I think the right answer is neither. You need to do everything you can, and each of those has some value. So I try to look at both the technicals and the fundamentals. And fundamentals, I tie that to valuation. So Yeah, like I said, you're asking some great questions. These are like, does God exist kind of questions in my view. So I don't really have a great answer, but I think, you know, I think a lot of people get too caught up in the short term. I probably suffer from that a little bit as well. And so I think the most important thing is to understand your tolerance for risk, to understand what can happen. I mean, I've literally watching this market, which is more volatile than others. I've seen, stocks go down 80% and then go up, 1,000%. And so, you don't want to sell the stock right at the bottom. That's for sure. So the answer to that, and it's not a fail-proof way, is know what you buy. I find too many people, they buy what their brother-in-law bought, and just because their brother-in-law bought it and they heard how great their brother-in-law did last year on something else, and then you don't know what you own. And so I think that's your best defense. Put in a lot of work and know what you own.
Yeah, absolutely. Do you believe in more day trading, or you kind of hold it longer?
So just for your audience that doesn't know me, I've never bought a cannabis stock. It's kind of funny, but and some people might say it's hypocritical, but it's really about not wanting to front run my subscribers at 420 Investor and trying to be as objective as I can. And so ownership of a security might impact the way I think. Yeah. And so and it also, if I buy something and then I tell everybody else to buy it, then it goes up, and then I sell it and then it goes down. It's just, I don't want to play that game. That's the way a lot of people make their money, believe it or not. So you're asking, so I don't ever recommend any day trades. I'm not against day trading, but that's just not what I do. I do have some pretty short-term focused trades every now and then that I would describe as hopefully going to play out within a week or two. But for the most part, where I think I do the best is identifying long-term opportunities. And so I have two model portfolios that are long-term focused at 420 Investor. They both had exceptional performance. And my detractors would say I don't have to pay commission, which is true. And that, I get good execution maybe. I try to make sure it's realistic. So I'll grant that, but the performance has been, even if you were to say haircut it because of those factors, it's been really, really good. Like this year, the market's dropped like 30%. My model portfolios are up, I don't know, 10 to 20%. It's like you can't explain that by commission. And it's not like I'm trading them every single day. I've held some of these positions all year. So in these longer term focused model portfolios, I think it frustrates some of my subscribers because they're fully invested. I don't market time. I mean, at the beginning of the year, I went to my maximum cash that I'm allowed, and it was a conscious decision. And that was because Jeff Sessions, suddenly ripped up the Cole memo, and I thought it was going to create a huge disturbance, which it did. But in general, I don't really have high levels of cash. It's fully invested. And so what I try to do there, I try to first of all, have a long-term focus, but that doesn't mean that I hold the position and never trade it. So I do what's called trading around the core. And so I might hold a name, and it might be, if I really, really like it, it might be 10 to 15% of the portfolio. But if it rallies, and I actually have a rule, it can't get above 20%. If it, say, rallies to 20%, I'm forced to sell it, but I would probably want to sell it anyway. And so I trim it. I don't say goodbye to the whole thing. I maybe sell a quarter of it or something like that. And that's been very helpful to me because there's a lot of volatility. I said earlier, it's a volatile sector. It's new. These are startups. The markets aren't particularly liquid necessarily. The stocks move around a lot. And that can be your friend as an investor if you don't get scared and panic. When the stock goes down, you want to buy. When it goes up, you want to sell if it's on a long-term up path. So that's, the problem is when you're not panicking and it dips and you buy it and then it drops more. That's obviously an emotional challenge, if not an intellectual one as well.
It is an emotional roller coaster. It really is. So I've just decided that some of the stocks, I just really believe in it. I like the management. I am the type of person that does that kind of due diligence. And if I like it, so be it. If I lose my money, I do. But
let me go back to another question because okay. I think I have something else to add to that. So I also tell my subscribers that they're going to be their own worst enemy. This is just being a human. You're your own worst enemy when you let your emotions get involved. And so you need to do things that are going to minimize your own effing up your own investments. And in other words, like I said earlier, the stock goes down, you panic, you sell it, and the next thing it's up, and you're like, why did I do that? So the way to get around that, in my opinion, is to not put too much money into it. I mean, if that's been, I think, the worst problem for people. And I survey my community at least annually, if not semi-annually, and I ask them, how much of your investable assets do you have in the cannabis sector? And the answer can be more than 100% because people use margin. Yeah. And so, it's a range. And my happiest subscribers, I think, only have about 10% in. And because it's enough. I mean, if you can double, like last year, my model portfolios were up over 100%. So if you can double your money, and if it's only 10%, hey, you just doubled 10%. That's just 10%. And then you made, a market return on the other 90% if you just were invested in the market. That's a good number. So, and it depends on how much risk tolerance you have. But I think the people that get into trouble are these people that are 75% or more of their assets in this market. It's crazy. And I don't advocate that.
No, and they're being told they buy, Mike Robinson, and they buy other people, pot stocks. You can be a
Oh yeah, I know who you're talking about. Yep.
Yeah, and to me, it's insane. So, what are you looking for in a company? Oops, Karen just moved the thing.
Am I right?
Oh well, no, it's not you. It's not you. It was me. The question went away. It's basically, I think I remember. What is it that you're looking for in a company when you invest?
So I came up with this cutesy sounding thing a few years ago, and I'm sticking with it. And it's called the 3 Ps.
Okay.
And one of the Ps is a weird word. You got to Google it, but I promise it's correct. So the 3 Ps are people, plan, and pecuniary. And so pecuniary just means money, but it's a P. If I call it the PP and him, it wouldn't sound as good. So the first thing I
talked about quite a bit lately. PP. Anyway,
PP.
Go on.
So the first P, the people, I say that first because I think it's the most important. We've already said this is a startup industry. What I'm looking for in companies, it's not only the quality of the management, it's also an acknowledgement that you can't come from a blue chip background and be a cannabis expert. So, and you can't be a cannabis expert and have a blue chip background. So I'm looking for in these teams, whether they're directly on the staff or they figured out a way to cross that divide, to have that core domain expertise of what it's like to run a successful company in corporate America and what it's like to grow cannabis or participate in the cannabis industry if you're not a grower successfully. So it's really the people. And I think, what do they say? You bet on the jockey, not the horse kind of thing. And I think in a startup industry, that makes a lot of sense. So I spend a lot of my time trying to figure out if these people are bullshitters or not. And there's a lot of them that are bullshitters. So that's the first part. And then the business plan is probably should be third, but I said it second, so I'll cover it now. So business plans have to be flexible. I mean, New Cannabis Ventures has become a very successful business for me, but it started off as a terrible one, and I had the wrong business model. I tried to make it a subscription model, and instead of opening the content up to the world, which proved to be the right model. Mm-hmm. So similarly, some of these companies have this idea of what they're going to be, and I think the investor needs to evaluate that and see if it makes sense, but they also need to make sure there's a plan B or plan C. Things change very rapidly in this industry, and a good example, in Colorado, they changed the rules on edibles like overnight, and things like even right now in Colorado, people don't know this, and I just learned this. They're outlawing nasal and suppositories, and it's not been widely reported, but there's some companies out there publicly traded that this is what they say they do, and in that market, and nobody seems to be aware that this is going on. But anyway, you have to have a plan B. So that's the plan part. I think, you can't just look at the management. You have to understand what they're trying to do, see if it makes sense. Mm-hmm. And then the money part's actually just right under the people. People without money are worthless, right? You can have the best idea in the world. If you can't fund it, you're not gonna, I don't want to invest in that. Mm-hmm. So that's what I spend a lot of time looking at. It's actually easier. I mean, I spend a lot of time trying to evaluate the people, but I don't always meet them face to face and things like that. And I think I'm a pretty good, sleuth on that. I can research and see, oh yeah, this guy was in trouble with the SEC 10 years ago, probably not trustworthy. But the money part's easy to evaluate. It's publicly available information, and it always amazes me how many investors they don't know how, or they don't care to look at it. But if the company's not properly capitalized, it's probably not going to succeed. And so that's that. I spend a lot of time looking at that.
Okay. No, that makes sense. And then I think we've pretty much gone through, what's dangerous about investing in cannabis stocks. Anything to add to that? And
Yeah, there's a new danger. I'm kind of looking into it, but apparently, if you invest in cannabis stocks and you're Canadian, you may not be able to travel anymore. That's a freaking big risk. I was reading about this guy Sam Zamer, I think is his name, and I know he's a big ArcView member, and he lost his ability to travel to the United States. He's from BC, so I don't think that's a risk for most people, but it is kind of weird. I know, right?
no, it's getting crazy. It really, really is.
Wow.
But wow.
Yeah.
Anything else to add? Because we've been on 25 minutes now, and just time to go soon. But is there anything that you'd like to say to people?
Well, just the closing comments, and feel free to follow along at New Cannabis Ventures. It's free. I don't need to plug it that much, but the part I would share is if you follow along, whether it's following us at New Cannabis Ventures or anywhere else, I think you're going to see a very dynamic industry. And I don't want to discourage people, because I'm very optimistic, more optimistic than I've been in years, because things are finally changing in the right direction. But I just want to remind everybody it is a risky industry, and as a startup venture capital type of industry, and there's a lot of demand right now, and you see these people, you mentioned one by name earlier, and I'd be happy to mention a bunch of others that they're out there feeding the public these piles of bullshit about how they're going to miss out on the opportunity of a lifetime, like they're going to be the Seagrams, and they're not. They're just going to be investors, and just be very cautious, and especially in how you consume your media. There's just a lot of paid promotion and hyperbole out there, and just be aware that it is risky, and be prudent, diversify your portfolio, don't put too much money in, and enjoy the ride, because I think it's going to be really exciting. I devote my full time to this industry, and I wouldn't do so if I didn't think it was a good opportunity.
Yeah, I agree. Well, I look forward to more, and I'm hoping that we'll do another conversation. Are you open to that?
Yeah, sure.
Okay, cool. I will reach out to you. And everybody, thank you very much. Good luck investing.
Thank you.
Bye.